The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everybody. This is the Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon, this time, Eastern Time. It's 877-927-6648. Love to take your calls. Good day for it, too. And this 20th day of May, what's going on? Well, a number of things are going on. The rotational correction is still ongoing. The aspect of looking at diverging indices, diverging stocks within indices, there's just a lot that's happening. And the most important thing about what's happening is that in terms of the, how can I put it? In terms of the sectors that are working, you're now looking at the Qs, the NASDAQ QQQ series, trust, at 88.37, up 5 cents, acting better than the Dow, which is down 22 at 16,489. It was down 60-something just a few minutes ago. It was also up a little bit this morning. What we're looking at is that the Dow and the S&P are aligning. Dow is down 263 at 1882. When I try to put the whole package together for my subscribers to my opening call, I just decided that it was a little easier to be raising cash right now, being selectively long, looking at stocks that I would like to be in, but having patience. And by that I mean I want to continue to try my very best to help subscribers identify some of the turnaround situations, some of the stocks that were just decimated on the way down, have finally decided that they're attempting to turn around and are starting to do so successfully. I think that that's a safer way right now to be on the long side, because to be on the long side but the wrong side could be very costly. And if you're on the long side in stocks that have just started to get a little bit of a tailwind, there's also a little experimental part of this that's going on right now, so that our position in staples, the stock that has done very well on a percentage basis, we got stopped out the other day for a gain, and then yesterday had a pretty good day, and I was very upset because I thought, oh no, did I get stopped out? Now things are going to take off. Well, there was an earnings report today, and as per usual, it was very disappointing. Staples SPLS is trading. Let me show you the chart right here. If you're looking at Tiger TV, you will see Staples is down 11.5%, down 154 at 1185. It made a peak E. One of the reasons why I raised the stop, I didn't want to get trapped at all. I was even prepared to give up some potential gains by not just taking off part of the position, but taking off all of the position. Most importantly, that 200-period moving average at 13.58 was almost hit at peak E at 13.50. And yesterday, there was a chance that this could be a right shoulder failure or a breakout, one of those Chapman wave cup and ladle breakouts, but we were not in the stock. This morning when the news came out, gapped down. It's indicated it should gap down, and lo and behold, it has gapped down. Made a peak F at that peak E top of the daily. That was peak F with a silent doji the next bar back on at 3:30 in the afternoon on the 11th. That's not the 11th, that's the 13th, isn't it? Yep, the 13th. So now we're looking 13th of May. And now we're looking at a situation that says, uh-oh, all that work that it looked like they were trying to do has just been a dismal failure. Whereas a stock like a J.C. Penney, which I've spoken about a number of times, we don't have. We actually bought a little bit right at the lows, took a little bit of a profit, and that was it. Trading down 22, down 2.40% at 913. I've got my eye on this. I don't know when we'll get into it, but my eye says, and I went into two of the stores. I say there's a tremendous change. I like what I see. I just don't know the financial part of it, but it seems to me that maybe the financial part, in fact, has turned around. So this is one on my list that we'll be going back into, but this time trying to hold it for a longer term position at some point. I don't know when. So there are a couple of questions in the den. Let me just go to gold is up 10 cents at 12.93. Silver's up a tad at 19.30. Platinum's at 14.69, up 38 cents. High-grade copper took quite a hit this morning. Why? Well, have a look at this. HGM 14, that's the contract, made a peak D. If there's no new recovery high today, got repelled at the 200-period moving average of 3.20. It's trading right now at 3.1485. But let's look at the continuous contract. That seems to always give me a much greater sense of what's going on. That did make the D in the 120-minute chart. I mean, watching copper, it's done fabulously. Hasn't really translated much into too many positives generally, but I like what's happened. And the weekly chart is in leg C. Very nice move from the low of the 285 area to the 3.14. I think that's very good. So copper, let's see, bonds. Yeah, this is very interesting. In my TLT chart, I have peak C at 114.41, I'm sorry, because it can't go E, F, G, A, B. No, it can do that, but you don't get an H. That's what I wanted to say. So my suspicion is that the U.S. bond itself, which made a peak D, is telling me that the MACD is still good. The stochastic's at 81%. There could be one more little pop-up. Now, there could be a much bigger pop-up if we're going to see the general market fail to maintain an upside bias. So just real quickly, we've got questions in the den. Let me see what we've got. CRM, yep, earnings this evening. I didn't have any position in that. I don't like the stock. There could be a pop to the upside. My guess is in a big consolidation. That's Salesforce.com. Next question is IWM. IWM, yep. IWM trading at 109.43, down $1.32. Had a nice spike in leg A, but that seems to be fading. We don't know yet. But unless the IWM, the Russell 2000 iShares, can spike to the 112.50 area in the next 3 days or so, my suspicion is just making H patterns that are going to be repelled by the 9-period exponential moving average in the weekly chart, which is at 111.57. Next question, Home Depot. That was interesting. Home Depot came out with a disappointment. Earlier on, pre-market, the stock was down about a point or so. Now it's up 2.14 at 78.64. And I've been to Home Depot a number of times lately, well, not lately, over the past month or so. And I'm impressed with a couple of things that have happened over the past year. The average knowledge of the people that I've spoken to has really, their helpfulness and their knowledge, I think is from my perspective, has actually improved over the last year. I don't know whether it's training, happens to be the people I spoke to, but just generally, anyone I spoke to, I asked a question, I got some pretty darn good answers. And they were people that were in plumbing, I'm talking about something completely different that I wanted to know about, or something that I wanted to know about in plumbing, and I was in the paint department or whatever. So I like that. I think that's great. I think that gives a very good sense of a communal, a kind of a focus that is integral to the needs of the client, and I think that's very good. Now I've noticed a little bit of improvement, at least with the people that I've come across at Staples, but it is the advertising that I thought was starting to improve. this is a big disappointment. We're going to watch this one closely. It's going to be a long process because they're in, they do a lot through the internet. So it's a very hard thing for me to gauge just popping into Staples stores. In the meantime, back at the ranch, the volatility index, yes, S&P in the den says Lowe's customer service is awful. I have been to Lowe's, not often because a little bit far away. And what I have found is that my impression was that Home Depot, the number of people and the attitude seemed to be better. So I don't know, maybe I can't really make that as an anecdotal thing like that as a big market piece of news. No, it's just my own observation. So now there was one other question that I had. The Russell RUSL ETF, if you have time, and it's 1550. Oh, let me just go back to that. Is that the IWM that we were looking at? No. Which one is that? The Russell ETF. You're talking about IWC, I think it is, or is it IW? Nope. In the den, KJS, if you could just tell me which Russell it is that you're looking at. I don't seem to IYM, IYB, IWB. Maybe that's it. Nope. I'm just trying all these IWC. Which one was it? It is IWM. But how could you be in a 16-something? Russell symbol, RUSL. I've never looked at this. Oh, isn't that interesting? Very nice. Every day something new. Direction daily, Russia. Oh, Russia bull. This is the bull market for Russia. So RSX, I think I've done RSX. Give me 1 second. RSX. Haven't done. Market vectors Russia. Give me a second. I just want to do this one because I think that would be your route, unless I'm mistaken. Someone will correct me, I'm sure. So this is A, because I looked at this the other day. I didn't actually do any notation. It was just in passing. This is in leg D in the daily. This is in leg B in the double check. No. This is B. This is leg C. Leg C in the weekly. So here we go. Let me just get to this for 1 second here and double check it. Yeah. So if you're in the what did I say? See that you were in at? You were in at something real good. All right, I'll be back with this one. I'll do a little work during the break on this one, and then we're going to go to George and you. George, you wanted to look at which one?
Manitowoc.
Okay.
MTW.
MTW. We'll be right back with Manitowoc Company straight after this break. Basil Chapman, Dow's down 36, S&P's down 4. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 50 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and we are on right at this particular moment with George in New York. Hi George,
good
how
morning.
are you?
How are you today?
I'm good, thank you.
Good. How's the weather up there?
Oh, we're getting there. A little cool, but we've turned the corner for sure. We had a perfect, just a great weekend, and starting to get there.
Yeah, it was. It was. Agreed. Today I'd like to look at Manitowoc.
Okay. Oh, good. You pronounced it. What?
Manitowoc.
Yes. No, I like the way you said it the first time. Manitowoc.
Manitowoc, yes.
And, so this is a very interesting company. I had looked at it some time ago, and then what happened is there was a sudden move in the daily chart to, in a cup formation. It made a perfect arch formation. Let me just draw this in. I had to redo this recently, so let me just do that. And it went to there. Actually finished up over there, and then it made the cup formation, and the cup formation went from there. It's lovely the way these things turn into sine waves very often. First the cup, and then the arch, then the cup again. And what happened is it had a sudden spike, must have been news related, but it happened to be a peak D at 33.46, because the next day after it did that, on the 1st of May, the 2nd of May, it plunged to the downside, gapped down.
Earnings.
That was the earnings. So the anticipation was before, a little bit like Staples, and then comes the earnings and plop. But what's happened is it's made a beautiful kind of a curve to the downside on a technical basis, as it made lower lows and lower highs But that curve says, hey, I've just formed some kind of a base in the 2684 area, 2687 area. That's 7 points lower than where it was. That's a lot. That's 20%. So in this particular context, I have to put it to the weekly. And this entire move to the 3346 high was just an absolute perfect example of a Chapman wave rogue wave. So the rogue wave is where you have all the signs, all the signals, everything about the action says you'd be perfectly correct in either exiting the stock or shorting it as it started to pull back and it broke under the 9-period exponential moving average, and that was back in the weekly chart going into mid-April. And then out of the blue there was this move to the upside. Now, the idea of a rogue wave, and I'm just going to, for 1 second, because I know a lot of people have my CD introducing the Chapman wave methodology. No, I'm just going to show them that it was Chapter 11A, and I discussed this very thing. Chapter A, 11A. Let me just see if right. Whoops. 11A. I don't remember where 11A is. All right, I have to find that. 11A must be, so this is the, I think 268. Okay, that's it. So 268, we're going to move on to 268. I just want to show the concept visually. There it is. So then the rogue wave, this chart pattern usually occurs after a sell mode appears to be in progress. Having shown up on the previous, in this case it was the BBH, it's a biotech chart that I show in my CD, it is unusual to come as a peak D. But it usually comes as an E or an F. But the essence of the rogue wave is surprise. The rogue wave essentially rallies without the structural support of the technicals. A final up spike unfolds after it appeared that a sell mode was comfortably in place. In this case, it actually concludes the buy mode to peak D. That's the BBH case, even as the technicals were deteriorating. And as I say, usually it appears after peak E or F, and could even conclude with a rare peak G. And then I show the example. So, and I also talk about the analogy and why this is so important. If there's a sign at the beach that says high tide at noon, and then suddenly at 12 or 8 p.m. you're sitting at the water's edge reading a book and relaxing when splash, suddenly you're soaked and wondering what happened. Well, the tide might have turned, but that one wave didn't read the sign. And that's basically what happened here. That one leg that shot up was doing it without any technical veracity at all. The MACD and stochastic in the weekly chart were just terrible. So it went up without any support. It was purely a rogue move to the upside. And invariably those things, when they fail, the bar that takes out the previous high, where people started to get out at 32.80 and thought, oh, Craig, we're happy as a lark, we're out. This thing's pulling back all the way to 29, and then suddenly you get this move up. So all of a sudden you got people that go back in. You get the shorts who have to cover because it's now at an all-time high. These things usually occur at all-time highs. And then, plop, it comes down and continues on its merry way down. Now there's a candle from last week that's really important. So I'm going to wait. We've got a break coming up. And when we get back from the break, I'm going to ask you what you are looking at, what you're going to do. And we're looking at MTW Manitoba Company. It's trading at 28.01, up 6 cents. Be right back with George and you.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back, and we're on with George in New York. We're looking at MTW, Manitowoc Company. Now, there's something going on in certain charts, monthly charts. And because of that rogue wave in the weekly, it really has impacted the monthly chart to the extent that the monthly chart has gone from way above the 9-period moving average to the 2679 low being tested. And the candle that I'm looking at is quite an important candle. It's the candle from last week with a fair, in relation to the stock's usual trading range, it's a fairly wide, long-legged doji. No, it's not a wide, it's a long-legged doji candle. The body itself is reasonable. So what I'm looking at is that there's a range, and the range says 29. If it breaks above 29, that'll be short-term to intermediate term, potentially positive. If it can hold above the 28.5 to 29 area for more than 2 out of 3 weeks, it says it could go a little bit higher. But at this point, I'm really looking at it to say that the weekly is probably going to impact negatively on the monthly chart. But any close below the low of last week of 2687 immediately sets up a move into that very strong candle of the 31st, the week of the 31st of January, between 29.39 and 23.15. So what are you looking at?
Well, presently I'm still long on it.
So you've been long for quite a while, right?
Well, because my entry is very low on it,
Right.
And, of course, I've been strategizing along the way with options as well as being long. But the question is now, I'm questioning myself, thinking of certain strategies, so I wanted to see where you see it on the chart on a weekly to a monthly, more or less, so I could play things out a little bit on a longer term.
So this is, at this particular point, so they're in the food service and construction industry, is that correct?
Yes, correct. What they do is they make commercial food service machines for the fast food industry and commercial kitchens.
Okay,
so you'll see automatic ice machines. You'll see ovens.
My engineer just said he saw it on saw it recently on a restaurant ice machine. Yeah,
correct. That's correct. Exactly. And that division did very nicely last quarter. That grew 9.4%. The problem is in the crane division. That dropped. The other thing
they are part of the Manitoba Cranes, mobile hydraulic cranes?
For construction, these the very large, the enormous construction cranes.
Okay.
They work with building buildings.
All right.
Such. So what I'm thinking to myself is you have two totally different divisions here.
Right.
Again, with all the activism out there, the low interest rates for borrowing and stuff, I still see it as a value play, and plus we're still in a cyclical recovery if you look at companies like General Electric and such.
Right.
So based on fundamentals, we still have really a $30 to a $36 to even a $39 stock. Presently.
So that's okay. So let me. So as I understand you right now, one of the reasons why you would like to remain long is that the homework that you've done projects about another 38 to maybe 45% increase in the price from where it is now.
Longer term.
Longer term, right?
Going out maybe possibly again 6 months to a 2-year time span.
Okay. So, in a sense, from what you're saying, I can see that in the monthly chart.
Mm-hmm.
It looks as if there should be a pullback, and the pullback should come below the 2679 9-period moving average. I'm talking about over a period of maybe 2-3 months. Mm-hmm. But I can also see that the candle forming right now in May is a candle that at some point could have a retest of the top, which is at 33.46. And if it breaks that level, the 35 to 36.5, 37 area is certainly a possibility. This is the way I would consider doing it.
P.S. That's where I'm also watching, because if I do see that 33.46, and it is coming up on light and very light volume at that point, then I may at that point switch strategies on it and just get out.
Okay.
But so I have a healthy profit.
So it's how you're going to handle the shorter term. So my suggestion is twofold. Number one is you would certainly want to keep a core position. But as a trading position, it looks to me as if the 28.53 to 29 level is going to be very strong resistance. If it gets there, I would take something off. And at a certain point, if it pulls back and it takes out the candle of the low of, what did I say, it was 28.99 of last week. If it does that, then the moment it took that out, I would also lighten up a little bit more, keeping, as I say, the core position. Where you put it back, the places I'd be looking at would be 25, around about 20, maybe 26.10 to 25.10 is going to be very important on the stock. I'll tell you why. Because if it breaks that, then that entire candle of January, all the way down to 23.15 becomes a possibility. That's a lot of points. 5 points from here, 15% or something. That's a lot. So that's why on the way up, at this particular point, I still think at best it's in a trading range. At worst, it's going to make lower highs and lower lows. My feeling is it's the latter. And I would try to deal with that way. But if you're in much lower at a core position, that probably shouldn't be changed. You would just use trading vehicles. You could even use options that if it goes to 29, you could buy a put option, longer-term put option for 2 months out.
Very good, yes, and out of the money. That's what I was thinking, exactly.
Yeah.
Also,
So
looking on the daily, I'm a little concerned maybe it may come down to fill the gap of 24.76.
The daily chart is the one that has me kind of nervous in the sense that the stochastics...
That's what ignited me to call you today about that because
so the gap
of that daily. I
forgot about the gap, but the gap in the 2636 to 2502. That's funnily enough, that's exactly the area I was talking about. But I forgot about the gap. That confirms it. So and not only that, 2551 is the 200 period moving average, and everything about this chart says it should come down to that at some point. So I hope that helps you, George.
I wanted to bounce that. Yeah, I greatly appreciate it. Oh, and by the way, with Staples, too, I agree. The earnings were really not good. And the only bright spot is in the back at the break room supplies. The revenues there have increased.
Well, that's good.
But, they're not addressing the store closings as fast as they should.
I think they just haven't moved. They've been very slow to really make a big move. We'll see. We'll watch them. We're out of it now, and I'm just going to be watching it. So thanks for calling, George. I appreciate it.
Basil, thanks.
Thank you. George always comes up with great stocks. He spoke about Manitoba ages ago. Nice move. There are a couple of things that I want you to do. I was asked about, was that crude oil? Let me just check in the den. Just real quickly, let me skim all the way up here. LCQ4. Okay, LC, I don't remember. Light cattle. LCQ. Is that what he said? Q or 14? Let's go there. What is that? Live cattle, not light, but live cattle, August. Okay, so I haven't got that. I'm going to go to LC, my continuous contract. It used to be all done. Of course, it's not done. It used to be done. Give me a second here. Cattle has been moving up very sharply, and what it's done for quite a while now, it has moved in very quick moves to the upside, very quick moves to the downside, and then it fills that. If it's to the downside, it'll fill it by moving up in a peak D. Look, there's a perfect example. Let me just grab this one to show the methodology of the Chapman wave. Look, there it is. It goes A, B. What are we looking for? We're looking for a D. There's your D. Then it goes A, B, C. And I'm calling the C1 and maybe C2. It could go to D, but I just want to be prepared. So this is C2. So you've got to be a little bit prepared here that it could be another one of those sudden dips to the downside of the daily. The weekly chart is the one that actually the monthly chart is the one that is just, it looks like a commodity chart because that's what's been happening with commodity charts lately. So let me just do this for the weekly crude oil, A, B, C, D. And we've got another A, B, C, D. That could turn into an E right there. So, yes, crude oil is getting a little bit... the technicals are not confirming the most recent highs, and it suggests to me that crude oil is starting to bump into the resistance that it often has. No, actually, it's gone higher this time, usually in the 135 to 136 area. This time, it's gone all the way to 139. So let me just do the monthly here. This is a continuous contract. I know that people like not to trade the continuous contracts, but I like to do my homework on those. I find them very, very helpful. And as long as something's helpful, I will use it. And this is leg D. Okay, that's what I wanted. The 200-period moving average in light... did I say crude oil? I meant cattle. I was thinking of crude oil at the 101 to 103 level. You can't mix your LCs here. This is live cattle continuous contract. The 200-period moving average was tremendous resistance way back in 2008. It couldn't break above it. Broke under it, used it as a repellent line. Plop, it comes all the way down. and it comes down. Of course, I'm talking continuous contracts, so you'll have slightly different prices, but 109.35, the low of December of 2009, that was the one that counted and started to move to the upside. Peak A, B, C. I'm just going to double check. I took a chance because of my eye picking it up here. 125.825. Hey, we're at 125.725. Well, I picked that one up. C, D, E, pulls back, has a right arm extension, which is very much like a rogue wave because it plunges immediately after making the modestly new high. So you got a peak E down. Oh, you can't put in a down arrow because it didn't cross negative in the MACD. So that's a plus sign right there. Pulls back. Crude oil pulls back one more time. So now what you've got, just on a purely visual basis, you've got one cup here. Looks like a pair of eyeglasses right there. It looks like a pair of reading glasses, half glasses. And what happens is it goes to a recovery high. The MACD is at 94%. The MACD is very strong. The stochastic's just gone to 94% and seems to be flattening out. So far, this monthly chart of live cattle, I must tell you, look at these restaurants. There's going to be some inflation here. Live cattle is it's just holding beautifully. My chart says that a flat MACD maintains the previous signal. In this case, that means it's still a buy signal because it hasn't broken under the 9 EMA. MACD is not crossed negative, and the stochastic is just now under 80% at 79.28. So all I can say is I see a trading range here slightly higher to 141, maybe 140, almost 142. I'd say 141s. And then on the downside, I close under 137, says you've gone into a rectangle, which could turn into an oval pattern. We've seen so many of these oval patterns, so watch out here because that's the pattern I'm looking at. Trading range between the 141s and then a pretty good pullback would take it to 135 to 134. So far, that's what I'm looking at on crude oil on the weekly chart, and the daily chart says double top, chance of a new leg D to the upside. All it has to do is break above 139.950, and you want to look at LCQ. I'll just do this because I want to see if it's a double top there. Yeah, it's a different pattern altogether. Oh, what am I wasting my time for? I should have just gone to this. So that's a different pattern altogether when you look. I don't know if these have front months and back months as important as crude oil. Is there backwardation here as well? I don't know much about that. So LQ, this is live cattle August. Strong leg E/B. I'm calling it E for now. I'm going to call it E/B. It could even go a little higher. E/C. Sorry, that's E/C. Looking very good. Stochastic needs to get to 80% to sustain this. My suspicion is it's going to pop up there and come pulling back. That means a pullback would have 138.75 to 138.14 as key support. My weekly chart here says, if I can just do this, do I have time? Yep, A, B, C, D. Is this EF or AB? I'm going to call it EF just for now. Because there's nothing negative, so I'll have time by the end of the week to see whether or not where it closes. Very strong. Live cattle could have a consolidation over the coming couple of weeks, but so far everything is very positive. Wow, good eye. I didn't even see that. So that's that question there. I'm covering a number of questions. All right, I'll be back. Basil Chapman.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Yes, in the den, the question, Melly, Mercado Libre, sliding away. Yep, it looks terrible. Peak D, long-legged doji in the monthly chart, back in the 140s, and now it's trading at 81.44. It really doesn't, if it takes out that Roman candle from the week of the 9th of May, that's 3 weeks ago, if it takes out 80.44, support would be 80.91. Yeah, there's not much support until you start to get to the 76 and 78, 77 to 76s. So it's not a good looking. Look at the way that back line, the 9-period moving average, is resistance. Not good. So let me just do this now. I want to do a little kind of a wrap up, a look at the week ahead and what I'm looking for. Overall, there are certain stocks that I really wanted to buy this morning, And then I just decided, I don't trust this market. I'm getting so many signals to say the upside's limited. It can go higher, but it's limited. And within rotational basis, yep, you got Amazon acting real nice today. It's up 643, 303, up 2.17%. So the beaten down stocks are trying to rally, but they're going to be bumping into resistance very soon. So I'm kind of cautious, and my thinking was that we could stagger towards an all-time high spike on Tuesday, a week from today, when we finish the long weekend early next week. But only if two conditions are met. One is by Wednesday afternoon to Thursday, the Dow has to, I can't see how that's going to happen unless the Dow, which is at 16,525 right now, is at least at 16,580s, but really needs to be, by Friday, it needs to be up in the 1660, somewhere close to 16,600. That's important. And I was about to do that. Thank you, Peaky in the Den. I was going to go to my Dow Quartet. Look at this. GE plummeting. Hey, that's not a good sign. GE is a real good indicator for the short term. Intermediate term, UTX, the other side of my Dow Quartet, the pilot light for the longer term. I've got that at a peak C, and it's turned into a peak C minus. I don't know how to count it. I've counted it about 200 times. I don't know how to count it, other than it's a C in the weekly chart. It will be very unusual, but it is an F, a potential F in the United Technologies in my monthly chart at that resistance level. I have to respect that. IBM, number 3, well, not in order. IBM is the third one I'm going to be looking at out of the 4. And IBM is right at the bottom of its range now. Also got this C, but it's a retracement failure mode in the weekly, so that doesn't matter. But the monthly chart at 215.90 made a year and a half ago, maybe 2 years ago, that's still in place. And I've got like a right arm, a right shoulder failure pattern. My CD introducing the Chapman methodology, chapter 21, slide 362. That looks like the H pattern from the top. Usually it comes off the top, this particular pattern. And when you're looking at Triple M, just the other day, it went to an all-time high. There again, I can't understand it. Weekly chart is in C, A, B, no matter how I counted it, C, the potential peak C. Whatever it is, it could be an F in the monthly. Oh, man, I tell you, I have to respect this period as a period fraught with conflict. And I'm going to make it just real simple, as I always try to do. And this is what I'm going to say to you. If the Dow in the next 2 days closes under 16,380, 16,350, that's really not a good sign. At the same time, if the VIX increases and finally, instead of being down 4 cents like now, down at 1238, if the volatility index gets into the 1360s in the next few days to a week, that'll be a change of trend. Right now, there's still some buying pressure.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.